Welcome to Inside the Wall analysis of PepsiCo's Q3 fiscal year 2025 financial results. The quarter highlighted a widening gap between weak underlying demand and deteriorating profitability, as price-driven revenue growth masked volume declines while rising costs, one-time charges, and ongoing portfolio reshaping drove a sharp margin contraction and double-digit drop in net income. In the executive summary, we see that a 3% revenue increase was entirely due to a 4% rise in effective pricing. Organic volume declined by 3%. Meanwhile, operating profit fell by 8% due to cost inflation and one-time charges, including impairments to the Rockstar brand. Looking closer at the revenue analysis, reported net revenue grew 3%. However, this growth was purely price-driven, with effective net pricing up 4% and organic volume declining by 3%. This indicates weakening consumer demand. Segment performance highlights show EMEA as the strongest performer with 9% revenue growth. North American Foods, a cornerstone of the business, remained flat due to volume decline. Beverages North America saw a 20% drop in operating profit because of charges related to Poppi and high costs. Asia Pacific had unique organic volume growth of 4%. Profitability and margins were compressed. Gross margin fell from 55.4% to 53.6%, and operating margin contracted by 1.7 percentage points. Overall operating profit dropped 8%, driven by one-time charges and higher commodity costs. Reported profitability this quarter was heavily impacted by several significant one-time charges. These included a $133 million impairment tied mainly to the Rockstar and B and Cheery brands, $221 million of acquisition-related costs from the Poppi deal, and $141 million in restructuring charges under the company's productivity plan. Together, these weighed materially on margins. While higher commodity costs are largely cyclical, ongoing restructuring reflects a multi-year efficiency push, and the brand impairments point to potential structural weakness in certain legacy assets. With that context on earnings, the focus now shifts to cash generation. PepsiCo's cash generation weakened over the first 36 weeks of 2025. Operating cash flow declined to $5.5 billion, falling below net income and down meaningfully from last year, reflecting softer operating performance. Free cash flow also decreased to $3.2 billion, pressured by higher working capital usage of more than $3.8 billion, which weighed on cash conversion despite lower capital spending. On the balance sheet, leverage increased materially, with long-term debt rising to $44.1 billion following new debt issuance to fund acquisitions. Liquidity remains solid, supported by $8.1 billion in cash and fully undrawn $10 billion in revolving credit facilities. PepsiCo is pursuing a strategic portfolio pivot to capture high-growth categories. Key moves include acquisitions of Poppi and Siete, distribution partnerships with Alani Nu and Celsius, and writing down Rockstar, which signals a shift from underperforming assets. Several risks and watch points. Macro and geopolitical volatility, along with foreign exchange risks, could dampen results. The reliance on pricing may hit a ceiling as consumer elasticity increases and cost inflation persists. In synthesis, the headline revenue growth completely masks a severe underlying deterioration in both volume and profitability for the quarter. This means PepsiCo's third quarter revealed a challenging transition. Revenue grew 3%, driven entirely by price increases that masked a 3% decline in organic volumes, signaling weakening consumer demand. Rising costs, brand impairments, and acquisition-related charges drove an 8% drop in operating profit and an 11% decline in net income, confirming deteriorating earnings power. Strategically, the company is actively reshaping its portfolio, writing down legacy brands while investing in higher growth names like Poppi and Alani Nu. Near-term, margins and volumes remain under pressure, but these moves reflect an effort to reposition the business for longer-term relevance and growth. Thank you for watching this analysis of PepsiCo's Q3 2025 results. Please subscribe and leave us a comment with your thoughts.
Bye.